Hi everyone, and welcome to part 2 of our series on trading options. I'm Ryan Victorian, Vice President Financial Consultant here at Fidelity Investments, and I am excited to be getting deeper into the world of options with you. Our first video looked at some of the reasons people trade options and explained how options have different characteristics than investments like stocks. Now we're ready to start talking about how to trade options. When you first look into trading options, you might not know where to begin because there are so many different strategies you could use. But the good news is that almost all of them are built on 4 main actions. Once you know those 4, you have a framework that helps simplify even the most complex strategies. So in this video, we'll break down how the 4 primary trading actions work and explain when you might use them based on your outlook for the underlying stock or ETF. Let's get right into the 4 actions. This simple quadrant lays out just about everything you can do in an options trade. And that's right, there are only 4 choices. As we explained in our first video, you can either buy or sell options. Now we're going to introduce the 2 types of options, calls and puts, and explain how they relate to a buyer's rights and a seller's obligations. Let's start with the top half of our quadrant, where we have the long call and the long put. In both of these actions, you're buying the option, but options jargon can get a little tricky. Buying a call or a put is the same as being long or being the holder. These terms can be used more or less interchangeably, but to keep us focused on the actions you can take, we'll refer to these as buying actions. So, in a long call, you're buying an option or a contract that gives you the right to purchase 100 shares at the strike price at any time up until the expiration date. People will typically buy a call if they're bullish about the underlying investment, which is usually a stock or an ETF. Being bullish means they think the stock or ETF will rise and they want to lock in a way to buy shares at a lower price. It's that classic investing goal, to buy low and sell high, right? Moving on to the next action, we have the long put. This is when you buy an option that gives you the right to sell shares of the underlying stock or ETF at the strike price up until the contract expires. It's a different action for a different market outlook. Traders typically buy a put when they're bearish. They think the stock will fall before the expiration date, so they purchase the right to sell it at their chosen strike price. Now, let's look at the bottom half of our quadrant, which are both selling actions. Selling is also called being short or writing the option. So again, the terms selling, shorting, and writing can be used interchangeably. But we're going to stick with the simple term selling. First, you can sell a call. When you do that, you agree to sell shares of a stock to the option buyer at the chosen strike price anytime until the expiration date. Traders selling a call will typically be either neutral or bearish on a stock because they think the price is going to stay flat or fall over the life of the options contract. However, you can also combine selling a call with another options trade as part of a larger overall strategy, and that other action might reflect a different outlook. Those are the kinds of details we'll cover later in the videos on options trading strategies, but for now, in the simplest terms, selling a call on its own is a neutral or bearish trade. That brings us to the 4th and final action of our quadrant, selling a put. When you sell a put, you take on the obligation to buy shares of a stock at the strike price up until the expiration date. On its own, selling a put reflects a bullish outlook, but again, it can be combined with other trades. So that's it. These 4 actions make up nearly all the strategies that options traders use. Remembering this framework can really help simplify things, especially when you get into choosing more complex strategies. But before we get into those trading strategies, we have to cover one more important question. How are options priced? So in our next video, we'll look at options premiums and the factors that affect them. In the meantime, if you have any questions, please drop them in the comments section below. Thanks for watching and see you then.